Welcome to the fall edition of the W3 Financial Market Commentary. I would like to start by thanking you for your trust and confidence. We know that this year has been a trying year, emotionally and financially, and we are here to guide you through each step of the way. We have experienced a significant amount of volatility due to many world events, including Russia and Ukraine, inflation, recession, elections, and many more. We would expect the next few months to continue to have ups and downs, as we believe we need to get past midterm elections and get towards the end of the interest rate hike cycle. We are encouraged by the continued positive corporate earnings reports, and we would expect the next 12 to 18 months for the markets to normalize. Frank, would you share your thoughts, please?
Thank you, Steve. We know that sometimes during these turbulent times, it's hard to see the forest through the trees. And so we want to share with you a couple items as to why we feel confident and optimistic in the markets going forward, other than us just telling you that you should stay the course and not do anything different with your portfolios. There's a chart here that we're going to have pulled up, and it's right here. And what this chart is it's the University of Michigan Consumer Sentiment Chart. This is published every quarter by the University of Michigan, and going back in time to the mid-1970s. And the latest report back in June of 2022 was its lowest reading ever at a score of 50. To put this in perspective, this chart has a range, or this survey has a range of a score of 40 to 120. And the higher the number, the better. And this was the lowest score ever in the history of this survey. May of 1980, it was a low of 51.7. November of 1990, it was a low of 66. November 2008, it was a low of 55.3, and most recently here, June of 2022, is a low of 50. What is interesting about these low points I mentioned is that subsequent to them was the beginning of a long bull market in the stock market. And so that's one of the reasons why we are optimistic about the market going forward. The other item is there is a chart that shows that the S&P 500, when it has a 25% down move or more, so it's 1950, the one-year average rate of return after that is 21.6%. And the average five-year return after that is 83.3%. With that, Shelby, do you have any final thoughts for us?
W3 is excited to announce the expansion of our existing 5 offices with a new office in Ashburn, Virginia. We have partnered with Edward Skelly, Michael Bowie, and their team previously of Sterling Financial Partners, and welcome his practice to the W3 family. As we move towards the end of 2022, hard as it is to believe, we would like to sincerely thank you for being wonderful clients and friends.